Welcome to the National Grid's Choice Online News, and here at CFA 2013 in Singapore. Please tell us, what is an influential investor and what's the definition that has been changed over the years?
Well, the influential investor really is the investor which drives markets. There's many different types of investors. Clearly, there's investors that drive price. There's investors that are sufficiently sort of fast that they are the initial sort of drivers, as it were, the initial engines of price moves. What we have found, though, is that over the last few years, the perception of investors have changed with respect to risk. Their attitudes have changed with respect to risk, and how they manage asset classes has also changed. So looking at influential investors today is a very different exercise from looking at influential investors 4 or 5 years ago during the crisis period.
And now for State Street, you've done a tremendous amount of research, Dr. Evans, on how investors' behavior has redefined the performance. Are they still particular about performance, and do they have this so-called fear factor?
There's still a fear factor, largely driven by fundamentals. But what seems to have happened over the last couple of years, actually it's been quite evident over the last couple of years, is that a lot of that fear factor has been mellowed due to the increase in central bank liquidity that we're seeing. So with that increase in liquidity, then investors are being forced, as it were, to go out the risk spectrum and looking for alternative risk and looking for yield wherever they can find it. So there's still that fear factor there, but people have been mellowed somewhat by the central bank assurances on liquidity.
Now, what will be your advice for investors who are still looking for investments, and what would be your advice also on managing their expectations?
Yield is difficult to find, and so to find yield these days, you've usually got to go much riskier onto the spectrum of investment risk than you've had to in the past. So I think the days of very high returns and high yielding investments are just not there at the moment, and we can see that across even emerging market bond yields, for example. So what seems to be happening now is that people are going more and more into alternative investments, more and more into frontier markets and exotic markets, and moving away even from emerging markets. But of course, that increases the risk profile as well, and that's uncomfortable for a lot of investors. But some investors are willing to make those first steps into some of the more riskier frontier markets with an adequate sort of risk management system behind them. But there are small tentative steps into riskier assets than what we've seen previously. But it's very difficult to find yield these days, and that's the main sort of motivation and objective for all investors right now.
Well, how do investors manage, being, on one hand, they have to be aggressive and able to balance between aggression and as well as managing uncertainty?
That's all to do with their risk management skills. So really the best investors out there have very strong risk management skills. They're able to understand that if something is going against them, they basically cut out of those positions as quickly as they possibly can. So risk management is really key in this type of environment where assets are generally seen as overvalued in many instances, and where the bargains just aren't out there anymore. So really risk management has to be very key here.
Now, how can State Street able to assist investors in the coming future, and how can investors contact State Street?
Well, we have developed a number of risk monitors that tell us when we're seeing a breakdown in historical correlations, tells us when we're seeing some volatility or turbulence in markets, and that usually tells us that we need to be more aware of risk management techniques than in the past. So what we're really looking for now is, in this type of environment, we're looking for the ability to try and better insulate portfolios and investors against tail risk or against unforeseen risks. Therefore, it's a question of bolstering risk management systems, and we have a way of doing that. We have very many sort of signals that tell us how to bolster risk management signals. And in terms of getting hold of us and being able to contact us, we're available in Singapore. We have an office in Singapore. We have offices throughout Asia. State Street is now a big custodian player globally.
Is there a website for it?
There is a website, yes, and it's www.statestreet.com. And but actually there's another website which looks more at the research side, which can also be helpful as well in terms of risk management. And that is, if you go into Google and you just type in IR3, that will take you directly to the State Street research website.
Once again, Dr. Evans, thank you for joining us here at the National Grid's Choice Online News.
Thank you.